Hello, hello, hello. How's it going, everybody? Welcome to a Capital Hungry live New York scalping and market analysis session. How's everybody doing this morning? Good morning, good evening, good night, depending where you are in the world. Could I get a quick audio and visual check? Can everybody hear me? I think it's good. Okay, so let's get into it. All right, welcome to the Capital Hungry stream. We're going to be going through economic events, fundamentals, as well as technicals to map out some analysis and trade ideas to potentially execute on using the New York session volume. But my expectations for today are very, very low, and I'm going to explain why in a second. But before we do that, let's just go through the nitty-gritty stuff. This is not direct financial advice, but feel free to ask questions about technicals, fundamentals, and overall financial markets. But I am going to go through, obviously, doing analysis on gold, GJ, GBPUSD, Euro USD, USD CAD, and US 30 in that order. All right. Any questions about the Capital Hungry private service, just go to the website and leave it out of the chat. All of your free resources are linked in multiple areas, whether it's on the YouTube layout, whether it's in the YouTube description, or on this little chalkboard animation in front of you right now. Okay? Now, remember, before we jump into it, I know everybody joins these live streams. They just want to make money. They want to make some quick profit, but you have to understand that you have to have a good understanding of trading psychology, market conditions, and risk management, okay? So make sure as a manual retail trader who has countless different impacting factors to your trading psychology that you stay as emotionally neutral as possible and focus on the risk management, probabilities, and long-term vision. How can you do this? By first having a trading plan and risk management plan and following that trading plan and risk management plan like a religion. So remember, caution, stay smart, follow your trading plan, follow your risk management plan, focus on the long-term visions. This is the best way to keep emotions out and avoid crashing your account. Okay, so today is going to be a very busy and hectic day, as we have a lot in terms of economic events and fundamental points to focus on. So first, let's go through the economic events, because even though it's not directly some of these factors, even though they're not directly impacting like maybe some currency pairs we trade, it is going to be impacting investor behavior and market sentiment. And we do have some important things on the docket here. So 3:55 a.m. Eastern, we've already passed that, the Germany unemployment change, which was relatively softer. But in the next about 35 minutes, we're going to be focusing on the ECB Eurozone interest rate decision. This is obviously going to have a direct impact on euro pairs, but because it's a central bank discussing their monetary policy positioning, it's also going to impact market sentiment. For example, yesterday, you could see that when Bank of Canada announced that they're going to be slowing down quantitative easing, it had a short-term impact on the Japanese yen as well as gold, which we'll talk about later in a second. So 7:45 a.m. Eastern, and you guys will see all of those headlines regarding the Eurozone interest rate stuff. They'll be popping up on your left side of the screen here. We'll get the live headlines, live breaking news in another like around 35 minutes. Okay, so that's at 7:45 a.m. Eastern. That's going to be primarily impacting euro pairs, but also a byproduct side effect impact on market sentiment, depending what ECB says. In my opinion, I think the Euro Central Bank is still going to be keeping the economy in a relatively accommodative state. They might talk about the potential inflation risks, but still see that they don't see economic data or growth where they need it to be. And most likely it's going to have either a bearish or just a neutral impact on Euro, as a lot of that has already been priced in on Euro impact. Okay, so that's going to be initially at 7:45, but then we're going to have a follow-up at 8:30 with the press conference. Also at 8:30, which is very important for our US dollar pairs, gold and US equities, is the GDP quarterly, as well as the initial jobless claims. Now, the expectations is that this GDP report is going to be worse than prior, and also that initial jobless claims is going to show us a slight increase from the impact coming from the U.S. federal vaccine mandate, as a lot of people have been forced to leave their job, get terminated, resign, and so forth. So we might see that impact on this initial jobless claims report. And the GDP, I have the potential expectation that the GDP is going to be better than the forecast, but worse than prior. And if the jobless claims is poor, as well as the GDP is worse than prior, better than forecast, we should see a downside short-term move on the dollar and potential gold bulls as well. But I'll show you guys the economic monitor and we'll break down that data in a second. Of course, I already said it. Also at 8:30, this is where things are going to get hectic, okay? Because we have US GDP, US initial jobless claims, and European Central Bank press conference all at 8:30. So today is going to be a test of patience day. I don't see, and also because it's end of the month, and we're going to look at the technical ranges we are in on the US dollar and Japanese yen and how we need to adapt accordingly as manual retail traders. All right. So besides having all this economic data on the docket, which can leave investors indecisive the same time it's end of the month, you can also easily identify that the US dollar by itself individually, when you're looking at the US dollar currency index, is in an intraday range here and has been for about a few days, from about these 93.7 lows to about the 93.994 highs. We can also see our other safe haven currency, Japanese yen, after printing new lows, is also in an intraday range. So when we can clearly see that there's a lot of economic data on the docket, also understanding that it's coming to the end of the business month and we're going to be starting a new month shortly, and the fact that we've had some mixed sentiments from central bankers throughout the week so far, with Bank of Canada, Bank of Japan, as well as Euro Central Bank today, it's clear to see that when we're looking at US dollar pairs or Japanese yen pairs, they're going to primarily be in a technical range. So when you can identify as a manual retail trader that, hey, the main pair I'm trading is in a range, you have to learn how to adapt to that accordingly psychologically, meaning you shouldn't be looking for major moves when you're coming towards the end of the month, and you can also identify that these main safe haven pair, that this main safe haven currency like Japanese yen or the world reserve currency like the US dollar is in a range. So when you come to a pair like, for example, USD CAD, between 1.232, 1.24, ranging. When you come to a pair like Euro USD, which is primarily dependent on US dollar movement, ranging. When you come to a pair like GBPJPY, where the Japanese yen is also ranging, you can see over this is on the 4-hour chart. You can see it even better on the hourly chart, from about 156 lows to about 156.5. We are in a technical range, okay? So that's why I'm saying that, yes, we're doing this live scalping session. Yes, we're doing and looking for potential trade ideas to execute on and make money, but you also have to stay adaptive to the current conditions that we are experiencing, right? Which is understanding that we have a lot of economic events on the docket, that it's the end of the month, US dollar and JPY individually are in technical ranges, and even the global stock markets are starting to slow down coming towards the end of the month. Okay? Does that make sense for everybody so far? So don't have high expectations today. Don't look for hero trades. Understand the market conditions, market environment, and play it accordingly. How do we play that accordingly? Most likely, we're going to be taking quick scalps, 10, 20 pip jabs at the market on GJ, GU, Euro USD, and UCAD, and some potential. The only pair that's looking a little bit cleaner is gold, and I'll show you guys a full breakdown in gold now. All right, so let's start off with gold here, and we'll do a full breakdown here on gold. I'm going to show you guys what's been going on. So we can see here that gold has been in this ascending bullish channel for an extended period of weeks starting out at the new quarter, right? And I'm going to show you guys some very interesting price action that occurs in this area as well, and what I'm looking for in terms of target points. So let's start here, right? So we can see that gold is in this ascending channel, give or take some minor pullbacks and so forth. I want to show you guys something very interesting. You can see with the transactions between buyers and sellers, every time we get a significant new high printed, we have a very aggressive pullback phase that shows profit taking by buyers at the high, sellers jumping in and taking us to a better demanded price point before collecting more buy orders and continuing up. So you can see we get a high printed, aggressive pullback phase, high printed, aggressive pullback phase, highs printed, aggressive pullback phase. But these pullbacks do not break overall bullish market structure. And you can also see that once you have these pullbacks, you start to create an order block in liquidity zone at those low points. Same thing here, right? Once you create that order block of those liquidity points and you break above the order block resistance, you can see, give or take a minor retest, you have a potential breakout move of the order block, a retest, before potentially continuing up to target the previous high range and continuing higher, right? Does that make sense for everybody in terms of the technical repetition, the price action, and transaction between buyers and sellers? So this is what's going on behind the scenes, right? You have, fundamentally, inflation is still high from a macro perspective, and a lot of the tapering signals by the feds have been priced in. At the same time, the US dollar has been softer. These are fundamental bullish confirms for gold. But even though gold is fundamentally bullish and has been technically trending bullish, you don't want to get caught in these very aggressive waves that can completely take you out if you're scalping or day trading, right? But what you can identify is any of these aggressive pullbacks, they come from a new intraday high being printed by buyers. So this is the transactions happening by buyers and sellers behind the scene, right? Fundamentally, you have gold bulls and more buy orders in the market for gold for those reasons stated. Higher macro US inflation, a lot of the Federal Reserve tapering priced in. US economic data has also been a bit more lackluster, and the dollar has been relatively softer for the last couple of weeks as well. From these low points, you have buy orders enter the market, extend you up to a new high, not have enough order flow to break higher. From these points, buyers take profit, sellers jump in hand in hand to relieve them out of the market. For you to exit out of the market, if you have a buy position, somebody has to collect your order on the other side. That's just how it works. In the modern market, with so many market participants and so much volume and volatility, this is seen as an instantaneous transaction, right? But that's the basic simple principle. You can't exit the market if somebody's not on the other side to relieve you out. It goes hand in hand, money moving from hand to hand in that sense. So you have buyers enter from a demand zone, extend price up, profit take. You see this pullback as sellers jump in to relieve the buyers out of the market and push price down to a more favorable demanded price point before coming down to that demand zone, collecting more buy orders and extending into a new intraday high. Same thing happens here. We print a new intraday high well above the previous high. Buyers take their profit, sellers jump in hand. You don't break the bullish market structure or retest the previous low. You come to a more favorable demanded price point and you go and print a new high well above the previous high. New high printed, buyers take profit, sellers jump in hand. You have a pullback that does not retest the previous low, comes to a more favorable demanded price point, and you can see what I'm potentially looking to forecast next. All right, this pathway of price for us to see gold hold above 1795s and retest these previous highs around 1812s is going to come from poor US economic data. So we're going to need bad GDP data and bad jobless claims. And now let's go look at that in a second here. So what I see on gold here, and we called out this trade overnight, is you can see these various order blocks that get created. So high printed, high printed, high printed, right? You come down to a demand zone, you create this order block. You come down to a demand zone, you create this order block. Come down to a demand zone, you create that order block. You break and retest generally above the order block before continuing up. Here, you retest a bit lower, continue up. Here, we had the breakout here, retest here as well, and a potential double retest coming up, where as long as we hold above 1789 and 1795, or break above 1803, and the US economic data is poor, which I'll show you guys in a second, we have a lot of potential just to continue to play this trend, right? I don't see any reason for us to fight this trend or shift into a higher time frame seller bias unless we broke the market structure below 1781 and came below this demand zone, which you can see has not happened yet since the start of October. All right, does that make sense for everybody so far? Is everybody following so far? So in terms of trade ideas, if we come to 1795 or even to 1789, because we have a lot of economic data with the ECB interest rate as well as the US GDP, it's not out of the ordinary for gold to do very aggressive liquidity grabs. For example, look at this. This singular hour candle went from 1795 all the way down to 1784, rejected in the same candle, and then continued up. So if gold does deeper liquidity grabs before continuing up, that is perfectly understandable. That is how this pair behaves between the transactions between buyers and sellers. So anyways, I'm looking at 1795, 1789, and also above 1803 for gold buys. Even potentially breaking back above 1800 flat. I'm only looking for sells below 1781 if the economic data is extremely strong, or if we come to a new high and see a sell-off. So what I mean by that is, with the way gold has been behaving, we can potentially see our upside move, right? Pull back and continue up, but maybe at a new high printed, we get a pretty aggressive pullback play. So I only personally see sells in two areas. Potential new highs peaked around 1828, or if we break below 1781. Otherwise, I'm looking for playing the buyer bias and looking for 1795 or 89 pullbacks. Breakouts above 1803, I at least want to target the previous high, because you can see when the market is trending and you're still holding this structure, yes, you go to print new highs, but as a target point, when you're entering from these demand zones, you can at least anticipate revisiting the previous high. Here you come down, you can at least anticipate targeting the previous high. Same thing here. If we hold this structure, we can at least anticipate to target this previous high as a range to play. So is everybody following along so far? Because now I want to show you guys the economic monitor and show you guys the economic data we have coming up at 8:30 and my predictions for that data. All right. So is everybody following along so far? So let's pull out the economic monitor here. So what's very interesting, obviously we have ECB rate, that's at 745. You're going to see all the ECB related headlines come to the left of your screen here. All right. They're going to pop up to the left of your screen. But anyways, what I'm focusing on for the dollar impact and gold impact is all of this here. Mainly the jobless claims and this stuff. Now look at this. The previous GDP figure was 6.7%, which is extremely strong. But this time, Reuters expectations and economists' expectations are 2.7%, with a maximum figure guess at 5% and a maximum low of 0.7%. That means that majority of economists have expectations that GDP is going to see a drop this report. What my expectation is that GDP is going to be better than this number, 2.7, because this is what I like to call a buffered forecast. I'll give you guys an example of this buffered forecast. Just like the core durable goods report we had yesterday. So look at this here. A lot of economists have been expecting economic data to be having declines. So look at durable goods, which is an important report and led to some gold upside yesterday. We did a liquidity grab and then gold started pushing up, which I'll show you guys right here. So this initial spike down and pop up here was from the durable goods report. It was still better than the terrible expectation, but much worse than prior because economists set up a buffered report. So this data is still seen as relatively bad because the prior figure was a positive 1.8% and the Reuters poll was minus 1.1%. You can see the actual figure was minus 0.4. It's better than the forecast, but it's way worse than prior. So this is still a bad figure and led to some gold upside after the spike down in liquidity grabs. This liquidity grab coming from the Bank of Canada statement, which came at 10 a.m. Eastern here. So first, this upside move was from core durable goods yesterday, and then this spike down was from the Bank of Canada interest rate decision, but it got faded out and we still maintained bullish market structure and continued up, right? But you can see the impact that this report was still seen as bad because it's much worse than prior, right? Similar concept is happening today, in my opinion, with GDP. GDP last month was amazing. Like GDP last quarter, was amazing. 6.7%. That's extremely strong, right? Normal average GDP is like 4 to 5%. You know what I mean? Maybe even a bit less than that. But anyways, 6.7% is very strong, right? The forecast expectation is 2.7%. That means majority of economists are expecting a drop in GDP. I think GDP is going to come out to maybe a 3.5 or a 3%. And if the GDP is worse than prior and comes out to like a 3%, and even if it's a bit better than the forecast, gold should still essentially push up the same time dollar pushes down. What would be the best situation for us for gold buys and dollar weakness is if this GDP is worse than forecast, worse than prior. If GDP comes out at like a 2.5%, 2%, then gold should do a liquidity grab and then instantly start to push up. All right? But that's not all. We also have the European Central Bank press conference at 8:30 and initial jobless claims. The initial jobless claims forecast is exactly the same as the prior. I personally think, I don't know if you guys have noticed, but the US federal government has been recently trying to enforce a vaccine mandate. And a lot of corporations are following suit with this vaccine mandate. So tons of people who don't want to get vaccinated are being forced to resign or are being fired or they're quitting or getting let go, right? This has been going on over the last couple of months. So we can see that US vaccine mandate might have a potential impact on the initial jobless claims. Seeing this as a higher figure would be bad data because that means that more people are unemployed and they're filing for jobless claims. Do you understand? So my expectation, my prediction, even though like I might be 100% wrong, is I think GDP is going to be bad, worse than prior, but maybe a bit better than poll. And I also think initial jobless claims is going to be higher and show us a little bit of an increase in jobless claims due to the fundamental real world impact of the US vaccine mandate and a lot of people being forced to resign, quit, or being let go from their jobs. Meaning more people are going to be filing jobless claims, right? Is everybody following along so far? So my expectation is if this data is bad and this data is bad, is, okay, gold might do a bit of a liquidity grab, but we should just continue up, especially if we continue and break above 1803, targets to 1812s. All right, and we have to be cautious in about 15 more minutes. We're going to be watching this first. Euro Central Bank deposit rate, interest rate, and their statement. All right. Does that make sense for everybody? So I can move on to the next pair. And then we're going to wait about almost 13 more minutes. 13 more minutes until Euro Central Bank interest rate decision. And we'll get all the headlines to the left of the screen here too. This economic monitor is a part of the Reuters Icon terminal. It's very expensive. It costs about $20,000 a year. Like for all these news headlines, the Icon terminal, economic monitor, and so forth. Some secret order flow information. Bank. You know, I trade with the banks, all right? I'm a banker. You guys might not know it, but I'm a banker. And I'm just joking around. We don't use... I'm just a regular guy like you. But I'm just saying. This is a... No, that's also for... This is also used for the private chat because they get all these news headlines and so forth. You know what I mean? I'm just joking about the banker shit. Please do not take it seriously. Please do not take it seriously, the bank joke, all right? I'm just a regular retail trader like you guys. We're all the same. We're all the same. All right. So anyways, that's what we're going to be focusing on. That's my analysis on gold as potential buys. I'm only selling gold if we break below 1781 and have extremely strong data. No, I wasn't a banker. I worked for a bank, but I wasn't a banker. Like, I worked for a bank in financial tech, but I wasn't like an investment banker or trader. You know? All right, GJ. Now, GJ is in a pretty strong intraday range here, but we have to understand that we're starting to show a bit more seller's pressure from these highs. And if we break this double bottom low area and break below 156, then I can see potential deeper pullbacks down and potential short-term sell scalps. But for the time being, even though GJ is coming down to these lows again, we can clearly see that we are just in a technical range here on GJ over the last period of 12 hours. I used to work for Royal Bank Canada in Toronto, Ontario. I used to work at the 155 Wellington Street building. And I was a global operations analysis, financial tech analysis. It was like one step above an entry-level job. I was making about 70K a year. I only quit that job last year, actually. I was still working there when I was doing all this stuff. Fun times, you know, working my ass off. Okay, so primary thing for GJ is just to play this range accordingly. Okay, if we break below 156, then we can take some range fill sells down to 155.8. But we have to understand that GBPJPY is in a technical... Oh, actually, we're getting some negative Brexit headlines. So the reason GJ is falling down right now is due to some Brexit headlines coming in. So if this Brexit has enough of a negative impact here, and we break below 156, then we can take some sell scalps down to 155.8. All right, so this is what I'm potentially looking for on GJ. Either sells below 156 or buys above 156.2 or 156.5. Right now, we are in an indecision point. But I do see some seller's pressure developing from these Brexit headlines, and we do need to confirm Japanese yen strength when it opens up. But Japanese yen is also just in a range here. Okay? Gold. Yeah, gold gave some quick scalps off the 1800 retest we were talking about, but we'll watch 1803. No rush. No rush. Don't have FOMO, no rush. We have a lot of economic data today. We have a lot to focus on the docket, so we want to keep it We want to stay smart at the end of the month. You don't want to burn your account. All right? So GJ, if these Brexit headlines have further negative impact, we should have breaks below 156 previous lows. If we can clear below this range, then it's much easier, safer sells to break below 156 to target 155.8 and potentially deeper. Okay? Otherwise, we're just in this range. So I'm going to play the inside of the range accordingly, meaning if we don't break 156 and we come above 156.2 buys, break out above range buys. Okay? And then buys here, buys here. I'm only selling if we break the previous low to the left and break these current lows here. Is that fair enough for GJ? You guys know I give you guys great GJ analysis, but when it's ranging, I'm not going to force you guys to take a trade in a ranging market and play guessing games. Yeah, no, we're going to watch the 1 minute time frame for entries when we come to these price points of interest. We're going to watch the 1 minute time frame. All right? So there's no point fighting a ranging market right now on GJ, and it's best just to potentially play the range and scalp it, or just wait for the break below. Okay? Right now in the lower time frame, we can see some pretty sharp reactions in this area and fails to break below. So if we come back above 156.2, then I can see some buy scalps up to 0.35 and 156.5. All right. These red lines on GJ are PPLs following the quarter point theory, but further back tested to GBPJPY specifically at 00 flat, 0.200, 0.500, and 0.800. These are the divisions in every single 100 pip range for this pair specifically. I've only back tested these levels on this pair specifically. You can see the reactions on the 1 minute time frame at these levels is crazy. Like, look at these reactions at these levels. It's pinpoint. So you guys can take that if you want. You know what I mean? No, we're going to be talking about ECB in another few minutes in Euro analysis. So you can see the reactions on the 1 minute time frame at these levels. I like to call PPLs, psychological price levels. And they're back tested by me on GBPJPY specifically, 0.00, 0.200, 0.500, 0.800 in between every 100 pip range. It's great for scalping and monitoring price action and so forth. All right. For sells, I'm looking for 1 minute candle closures below 156 for impulsive sells, or break and retest below 156 on the 1 minute time frame for scalps down to the next range 0.800. Okay guys, let's watch the ECB stuff here because it's just in a few more minutes, and that's the first thing on the docket. If Euro Central Bank says they're keeping everything in an accommodative state, meaning they're still going to keep stimulus active for their economy, interest rates are going to stay the same, then Euro is going to push down and gold is going to push up. My expectations are that they're going to keep everything the same. All right, I think that they're still going to keep stimulus active for their economy. They might give some discussions about higher inflation and COVID risks and so forth, but I think that they're going to keep everything fairly status quo. So far, if you guys want to rewind, I gave analysis on economic events, fundamentals, gold, and GJ. But right now, we're taking a little break on the analysis because we're waiting for the Euro Central Bank interest rate decision. All right? We might as well put it on Euro USD to watch the impact a bit better here. After we watch this ECB interest rate decision, then I'll give you guys trade ideas on Euro USD, GBPUSD, and USD CAD. Okay, so let's just wait the few minutes for this. And also, you guys are going to get the statement headlines to the left of your screen here about ECB stuff. So we're going to watch here. The rates are going to stay the same. The rates are staying the same. That's a given. You know what I mean? And we're going to watch here, newsroom. So I'll answer some questions over the next 3 minutes. What's the best way to learn more technical analysis? There's over 100 webinars on the Capital Hungry YouTube page. Make sure you guys use all of your free resources, okay? Capital Hungry YouTube page, if you go to, there's way too many videos, people get overwhelmed, right? So you can see people get overwhelmed here because there's hundreds and hundreds and hundreds of videos on the YouTube page. Scalping series, technicals, fundamentals, and so forth, right? But if you come to my channel and click playlists, then it's a bit easier. You can see individual market analysis, live trading streams, live market update webinars, and the educational trading webinars. All right. Also, guys, make sure you check out the Capital Hungry Twitter page. This Twitter page has posted 25,000 tweets. Did anybody take the gold buys I was calling yet? So this Twitter page posts headlines all day, all night. It's better than Forex Factory, better than like other shit too. You know what I mean? So make sure you guys follow. Yeah, I already took. I'm not trading. I already took later. I already took GJ buys earlier in the range for buy scalps here. I took it on a bigger account with a 15 lot and 10 lot and made 4,000, and I took it on my smaller 50k account as well and made 1,300. So I'm not taking any further trades. I'm more just giving out analysis because I already took my trades for the day. You know what I mean? So yeah. Okay, yo, ECB stuff in a few minutes here. 40 seconds. Euro starting to push a bit down already. Let's watch what happens here. Did anybody take the gold scalps from 1800 to 1803? If not, don't worry. No, those trades were taken late London session or near Asian session close. I was just playing the gold range, and I took this bounce off this area here. I took an entry here. I'll just show you guys again. So I took an entry at 156.09, 156.23. So I took an entry here above the little order block, and I took an entry scaling in at 0.200. All right. So the Euro Central Bank interest rate stuff is the same. No impact really on Euro pairs. No, not much of an impact from here. Yeah, CAD impulsive move. Okay, so let's read the ECB stuff. Okay, ECB is going to be looking at potentially starting to talk about tapering. ECB says ready to adjust all of its instruments as appropriate to ensure inflation stabilizes. Most likely, Euro might push a bit up from this. Let's see, but we're going to keep reading. That's not actually too, they're not actually saying too much. Not much of an impact here. So far, gold had a nice bounce from the 1800 zone we were talking about here to 1803. We want to take further buys above 1803 now. Let's also watch GJ. If it breaks above 0.200, 1 minute closures above 0.200 for scalps. So I want to see some potential buy scalps above 0.200. Actually, they're keeping their PEP very similar still. No, they're still keeping stimulus pretty active until end of 2023. pretty much neutral impact from ECB. They're keeping everything pretty much status quo, not much of an impact. A lot of it has been priced in, so that's pretty much off the table here. All right, we might get more of an impact on euro at 8:30 when they have the press conference. Okay, all right, so now that that's more cleared up out of the way here, let's go back to doing some analysis. So GBPUSD. Now we can see that GBPUSD had a bit of a deeper pullback down to 1 point. Like we've been having this bullish market structure we've been watching on GBPUSD the same time that the dollar index has been in some bearish pullback structure as well. So you can see the dollar has been a bit bearish for the last 2 weeks as we've had some profit taking from some high points. Remember, the market moves up in two fashions. It's the same shit like I was showing you guys on gold. You have an extended upside play, buyers take profit, push you down to a demand zone. Extended upside play, pullback, continuation. Extended upside play, pullback, potential continuation as long as we hold above 93.5. Before the time being, dollar has been relatively softer and more bearish in the intraday time frames. So as the US dollar has been in this bearish pullback structure from these highs, literally since about October 13th, you can see also from October 13th, GBPUSD has been in some stronger bullish market structure. All right. But right now we're entering a bit of a range. If GBPUSD can break and retest above 1.378, I will look for some buys to revisit these highs. This is going to come if the US economic data is poor at 8:30 a.m. Eastern. Also, if you guys are in trades, like if you guys took the gold scalp, I would secure some partials and hold risk free because we have New York open in 10 minutes. For GJ, wait, don't take any GJ trades yet. Let's just wait 10 minutes because we have New York open coming up. All right. Okay, so on GBPUSD, we can see that we had this deeper pullback, then a technical double bottom and a bit of an upside move, and we started to range. If the economic data is poor and US dollar continues weak, we can take easy buys above 378 for 40 to 50 pips to revisit these high points. Okay. Oh, what the hell? Where'd that go? Oh. For anybody who missed gold analysis, GJ analysis, analysis on economic events and fundamentals, just rewind the stream. Yes, sir. Exactly. So if dollar stays weak and stays in that range or continues a bit more bearish due to poor economic data, as well as we have a break above 378 key level, then we can easily take some GU buys from 38 to 383 target point, roughly 50 pips. Okay. Euro USD, we're starting to create a consolidation zone, but so far ECB had a positive impact on euro. ECB really didn't have much of an impact on them. It was fairly neutral. It seems like it's already been priced in because they said the same stuff that they've been saying every ECB statement. So a lot of it's already known and it's already priced in by investors. But we can see that we're having a strong consolidation phase here, and we do have the expectation of potential. US dollar weakness if that GDP data is good. But the safest trade to play here on Euro USD is to not touch this consolidation zone from 1.59 up to 162 and just play these fundamental or technical confirms and patiently wait for these confirms, because especially as it's end of the month as well. All right, does that make sense for everybody? Right here, you can see very messy price action, a lot of indecision, a lot of whipsaws in this range. Best thing to do there is a no trade zone to stay smart. If we can break above these candle body highs, break above 1.163, then we can start to check off these confirms. And this is how you build confidence to execute. You say, okay, we have a weak dollar index. Awesome, check mark. We have a week, we were breaking above 1.163, check mark. ECB is showing us more euro strength, check mark. US data is bad, check mark, and then you can take the buys above here. So anytime I'm marking out trade ideas or doing analysis, it's based on price action, market structure, higher time frames, and fundamentals. And based on those factors, I like to create a checklist of conditions that need to be met, or like 2 out of the 3, 2 out of the 4 conditions that need to be met for me to execute on that trade. All right. No, we're for any trade entries now, we're going to wait 6 more minutes for New York to open, because we could have some potential pullbacks with New York open. And we're going to have, gold is still going to do a pullback, in my opinion, before the US data at 8:30 a.m. Eastern. All right. It's not just going to straight continue up. It's going to do a little bit of a pullback, because 1803 is a higher time frame key level. All right. You can actually see we had a bit of a rejection from 1803 already. Where'd that Telegram channel go? Telegram just shut down there. Right? These key levels are cheat codes in Capital Hungry. So you can see we came right back to that intraday high, and we had this quick 40 pip scalp from 1800, but we didn't have enough order flow right now pre-New York hours to break above 1803. That's probably, we're only going to see a break above 1803 most likely after 8:30 a.m. Eastern if the economic data is weaker. GDP data weak, jobless claims bad. And remember, New York open can still give us a liquidity grab and better risk versus reward buys from 1795. So we're going to be watching that accordingly. All right. GJ as well. It's looking like the hourly candle is going to close with another rejection at this demand zone low. So no safe sells. If the next hourly candle, New York open, opens up and we create a bit of a lower wick and then come above 0.200, we're taking scalps back up to the range highs. And we're just playing this range. We're just going to play this range. Waiting for New York open. Take your quick jab at the range, grab your 10-15 pips, get the fuck out. Because at the end of the day right now, we have dollar ranging. Dollars in a range. Japanese yen is in a range. No point fighting a ranging market. No point having high hopes and expectations and being entitled. You trade what you see in front of you. You try to stay as objective as possible and trade exactly what you see. For example, you're not going to see GJ break 156 unless Japanese yen breaks above the range highs. Same thing for GJ pushing up further above 0.500. GJ is not going to break out of this range here until Japanese yen, the safe haven currency, breaks out of this range here. And Japanese yen is opening the same time as New York Open in a few minutes. If Japanese yen is weaker and comes down to these lows and breaks these lows, then 1000% GJ is going to break above 0.500 and do the opposite. But for the time being, yen is in a range, dollar's in a range, GJ's in a range, Euro USD is in a range, UCAD is in a range. Even the stock market is ranging right here at the previous highs as well. Right? So Euro USD, we're going to watch for the New York Open. And if we break below here and have dollar strength, then we'll adapt to the sells. But right now, we're still in that range. This is the no trade zone. It looks like, in my opinion, Euro might still continue down because ECB is keeping everything status quo. They're keeping everything neutral. So as the Euro Central Bank keeps everything status quo and neutral, meaning they're going to keep stimulus active, that's a bearish factor on the euro. And if dollar stays relatively neutral as well, we can break below this low and take advantage of this range here to 1.156. These PPLs on GJ are divisions in between larger 100 pip ranges, but the key levels, the white lines like on GU, on Euro USD or gold, they're based on historical price points of interest on the yearly time frame, quarterly time frame, and monthly time frame, because the fiscal year, quarterly periods and monthly periods play a big significance in the real financial world. All right. Yeah, so we're just going to wait a few minutes here till New York Open. We're going to see how these hourly candles close across the board. And then we're going to look for some further scalps to execute on for some potential GJ buys. Yes, true, correct, FX Analytica. Order flow is simply the observation of movement between buyers and sellers in market structure technically. Order flow is simply observing the movement based on price action, meaning the size of the candles, reading the consecutive candles and so forth, right? As well as using that in line with fundamentals in market structure. What happened to Bitcoin hitting 14K? It's just analysis. It's not like I'm against crypto markets. I just wanted a larger correction, and there still is the potential for the correction actually. If we just keep double topping at the previous highs, and all these people are getting pooled in through the stock market ETFs now. Okay, so gold here, new hourly candle, still closed, previous hourly still closed bullish. If this hourly candle can break above, if you get 1 minute closures above these candle bodies here, which is roughly 1803.5, that is some nice buys. Capital Hungry, are you getting FOMO on what? I don't get FOMO. Only emotional traders get FOMO. The market is always moving. The market is always here. To get FOMO is greed. To get FOMO is entitlement. When most of you guys don't deserve 1 penny from the markets. Yeah, in my opinion, like a lot of the crypto is pooling in the public masses, especially through the ETFs. So then the whales can profit take and liquidity and take them out. So Right now, in my opinion, all these various cryptocurrencies are getting pooled in with money from the masses so that when the market whales want to profit take and liquidate their positions, they're going to be taking the liquidity of the masses. This isn't going to, I don't, listen, I'm a supporter of crypto. I'm a supporter of the technology, but I also understand the market waves and so forth, and corrections happen everywhere. You know what I mean? So there's no single market, there's no single instrument that can avoid the investment concepts that are universally well known. Oil has crashed, gold has crashed, currencies have crashed and corrected, stock markets have crashed and corrected. At the end of the day, these crypto markets are very new. The crypto markets are babies. You know what I mean? The crypto markets are babies compared to something like gold or something like crude oil, which has had so much historical value for generations. So yeah, maybe I was off that when the crypto correction was coming, but a correction in markets, regardless what it is inevitable, because eventually the big whales are going to have to profit take. And when they profit take and when they want to liquidate their positions, this causes massive corrections. Nothing goes up forever. That is extremely dumb to say that. So I'm not against crypto. I'm personally waiting for the whales to profit take and liquidate their positions, which will clear out the general masses. And when that correction happens, I'm going to be the first one buying Bitcoin from a low. I'm going to buy Ethereum. I'm going to buy Bitcoin. I'm going to buy it from better prices. You know what I mean? I don't want to buy Ethereum or Bitcoin at all-time highs right now. That's just it. Listen, I have no personal attachment or bias towards anything I trade. I don't give a fuck if gold is going up or going down. I just want to be able to understand what it's doing and why and take advantage of it. Do you understand? I don't care if GJ is going up or down. I don't have a personal attachment to it. But all these cryptocurrency traders, they have a personal attachment to crypto. They are getting personally involved in crypto. They have an emotional attachment to their investment. They think crypto is going to save their life and change the world. That for a true investor, for a true trader, you shouldn't really have that much of an emotional attachment on a trading instrument or a market. You should use it for how it's supposed to be used. Investing, making your money, and getting out. Right? I trade gold all the time. You don't see me say, oh man, gold should be bullish, man. Gold should go to 3,000. I don't care. I follow the market structure, fundamentals, price action, and movement, and I take advantage day after day. If GJ's going up or GJ's going down, it's not impacting my personal life. You know what I mean? So that's it. I am nowhere against crypto. I'm not against the technology. When I said crypto is gonna have a correction or crash, it's just following market cycles. It's not that I think crypto is going to disappear. That's not what I'm saying. I'm saying that this new emerging market is potentially due for a correction, just like every single market has experienced. If crude oil can crash down to -40, if gold can go down to $500 an ounce, if the stock market can crash, then what makes you think crypto is so untouchable when it's the same whales that are playing that game? You know what I mean? So don't tell me when these whales want to liquidate their positions and they want to profit take, guess who's going to be paying them out? The general public's liquidity. Do you understand what I'm saying? It's going to be the general public who's been pooling in from these high points, putting in their savings, getting a loan, trying to think it's going to go to 200K. They're the ones who are going to get swept out. Their liquidity is going to be taken, and it's going to go into the pockets of the whales that are liquidating their positions. This is just a transaction between buyers and sellers on any market. So yes, my analysis at the time was incorrect, but I'm not a fortune teller. I just do analysis on markets, so much so that people pay for it and people trust it. Right? That's how experienced I am and how much knowledge I've developed. But at the end of the day, I'm not a fortune teller. If I was a fortune teller, I wouldn't be doing this live stream right now. I would be a billionaire. if I knew exactly what was gonna happen and when it was gonna happen, I would be a trillionaire. I would be the world's first trillionaire. You know what I mean? So that's all I'm saying. So people will literally look for some analysis that I did that's wrong and be like, oh gee, remember that Euro USD analysis you did 4 months ago? It was off, man. It's like, okay. You know what I mean? So anyways, everybody, right now, it seems like markets are a bit fairly quiet. We're waiting for that GDP data. Yeah, even if you had the market insight for one, like even if you could see into the future for 1 day ahead, you would be a billionaire. Think about it. You would just take I would take out a loan from the bank of like 100,000, fully leverage it on whatever's gonna happen, and then pay the bank back and take that. You know what I mean? But sadly, I am not a fortune teller. As much as you guys want me to be a fortune teller, as much as you guys think I know everything, I don't. I'm just like you. I'm no different from you. The only difference from me and all of you is that I've been studying the market since 2017, right? You can come here, and obviously now I'm taking some scalps like I showed you. I already showed you guys on the terminal itself. But obviously now you can see, oh, G's making $4,000. G's making $3,000. But nobody comes here. This is April 2019 when the channel was made, a free channel, when I just started finding a bit of success when I was trading penny lots. Right? Trading penny lots, looking at fundamentals, looking at technicals, not ashamed of the lots I'm trading and stuff like that. I'm not showing you guys this to flex or say, oh, look at me. Look at how much improvement I've had. I'm showing you guys that the only difference between me and you is experience. Not just experience, also work ethic. All right? So it's work ethic, experience, and literally working day in and day out. Looking at, this is me. We're about to look at initial jobless claims today, right? I was looking at initial jobless claims for the last 3 fucking years. I've been analyzing these reports, understanding what it's going to do. Hey, if we see a decrease in jobless claims, gold will push down. Using the, like, back then I was still doing the same type of analysis. Now I'm just more experienced. I have more knowledge, better refined skill sets, and more money to work with. But back then, what's the difference? Look. Hey guys, initial jobless claims report. If this decrease in initial jobless claims is fucking, if we see a decrease in initial jobless claims or whatever, it's going to equal to gold to push further down because of market optimism. Blah, 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 blah. Right? So you can see me talking about this stuff. For years, I've been going through in and out, sharing my process with penny lots and so forth. You know what I mean? Listen, who wants to do a trade-off 10K, Jeeve challenge 10K to 100K? I don't do trading challenges. I trade to make money and live in my life. I don't trade as a video game to do challenges against other people. This isn't a competition, and I'd probably shit on you too. Not to be like rude. So yeah. You can come here. If you come to the free channel and click this post, you can see my grind from 2019 to the current day. But guess what? 2019 is when I started finding a bit of consistency and success. I started trading 2017. My first 2 years, 2017 to late 2016 to late 2018 was failure. I probably lost $50,000 in the market. Do you know what I mean? I probably lost $50,000 my first 2 years. Gambling, following signals, over trading, over leveraging, following the retard shit everybody does. We all go through that trial and error. But the difference is, are you going to change your behavior and change your approach to the markets and actually improve? Or are you going to keep repeating the same shit that the 90% of people do, and that's why 90% of people lose? Do you understand? So my first 2 years, 2016 to 2018, failure. I lost 50K in 2 years. And I was only making 60K a year in my salary. So half my salary those 2 years went into the markets, fucking gone. And it wasn't like I deposited like 30K at once. I kept depositing small accounts that added up. $500, then crash it. $1,000, then crash it. $200 account, crash it. You know what I mean? And then when I started to change my trading psychology and approach to the markets, focused on learning more, understanding fundamentals, understanding psychology, looking at technicals and doing more studying, then in 2019 when I made this free channel, this is when I started to find consistent success. And then I also made back all of my losses that year as well. And then 2020 was a great year. 2021 was a fantastic year. You know what I mean? So don't just think that, oh, hey, Jeeve something like for example, don't just come and look at these different trades I'm taking where I'm making $2,000, or I'm showing you guys here, look, man, I made $8,000 on a gold trade. Don't just look at where I am at right now, all right? Because where I'm at right now did not just randomly happen. I went through a lot of trial and error. I went through a lot of money lost. I went through a lot of hardships and learning what works for me to get to this point now of making like $3,000 in a few minutes. You know what I mean? Making $4,000 in a few minutes, or making $8,000 in a singular trade. Or here, showing you guys the wins and losses, 20K in a day with wins and losses, everything shown. Okay? So do not think it was an overnight success. Do not think it was an overnight process. This has been years in the making. And we're almost coming to the end of 2021. And I've been involved in the market since like late 2016. Right? So don't get scared. Don't be afraid to fail. But anytime you make a mistake, you have to learn from it and you have to come back stronger and change your poor behavior. All right? You guys can join the Telegram channel and see all this stuff yourself. Wins, losses, risk management, analysis, trades, everything. You can see it nowadays when I'm making $10,000 in a day or $5,000 in a day. Or you could come when I first started trading in 2019 when I was showing the same stuff but using penny lots. Okay? No, I'm not in any trade now. I already took a GJ position during pre-New York hours, which I scalped off the bottom of the demand zone for about 30 pips and 25 pips and 10 pips on 2 positions. I'm not in any trades now. I'm waiting for the news release. And another reason why I'm not holding any trades right now is because GJ is in a range. Dollars in a range, US dollars in a range, yen is in a range, and GJ is in a range. I'm only selling GJ below 156. We can start to look for some gold buys if we break above these candle bodies here, above 1803 coming up shortly. GJ we're only selling below 156. I don't do any fundamentals for individual stocks, but I do fundamentals on the stock market indexes. Like I don't trade individual stocks. I trade the entire index itself. And you know what I mean? Yeah, I explained it earlier on here. So it was based on, so this is the demand zone here, right? 156 is that key demand zone, right? we had this initial break below, but then snapped back above the 156 demand zone with a break and retest. I took my buy entries after this bullish engulfing candle for the first entry. Then I took a second entry at 0.23 after the break and retest above 156.2. So my entries were at the PPLs. I closed them off around 156.35. Right? So the reason for my entries was that we've had multiple rejections on the 1 minute and daily time and intraday time frame to break below this price point. This just looked like a quick wick on the intraday time frames, and we had bullish price action snap right back above. So this was looking like a third failure to break below to me, right? Then we had a clean break and retest above the PPL in a double bottom. I entered after this bullish engulfing candle. And then as we continued up, we had very strong bullish price action, and I entered again off the break and retest there. A similar setup was also given here above 0.200. Okay. Now, if GJ doesn't break these lows here and double bottoms, I'm going to be looking for the same buys above 156.200. I'm only selling if we finally break those lows at 156. All right. So I'm going to be looking for the same buy setup if we fail to break these lows again and then come above 156.2. I'm going to be taking further buys there. I'm only looking for sells if we finally break those intraday lows on the hourly time frame, which will be below 156. Otherwise, dollar, yen, and GJ are in this range. Okay? GBPUSD, I'm only same thing. GBPUSD and GJ analysis are the same. I'm only selling GBPUSD below the lows. Otherwise, we are in a range. Euro USD, okay, Euro USD might set up the potential sell soon, everybody. We should watch Euro USD on the 1 minute time frame here for potential break and retest sells, but 10 more minutes we have till GDP data and ECB press conference. UCAD we're not going to touch, and US 30 we're not going to touch. Gold, if you guys, anybody take the gold buy scalps from 1803, secure some partials at 20 pips. Secure some partials here, guys. Secure some partials at 30 pips, 20, 30 pips. Secure some partials before the news comes out. Leave your runners risk-free. News in 10 minutes. And I think the news is going to further price push us up, but we might have a liquidity grab. So secure your 15 to 30 pips. Leave your runners risk-free. And then we're going to see 10 more minutes till GDP data and press conference. All right. If you guys got to catch the gold buys following the analysis I gave you guys live, make sure you guys send a like and subscribe. We called buys from 1800, as well as I told you, as soon as we start to break above 1803 or the retest candle above this area, start to take more buys. Did you guys get to follow the buys? No, I don't look for 30-minute confirmations. I'm not Raja Banks. I enter on the 1-minute time frame. We do our analysis on the intraday time frames, mark out our trade ideas, and then enter on the 1-minute time frame. Gold is booming. Your guys' runners are also up almost 40, 35 pips. Let's see if GJ finally breaks below 156 for sells here as well. Break and retest sells coming up here shortly on GJ, it looks like too. GU, we're going to sell below these lows. So GU don't touch yet. All right, guys, if you don't mind, I'm going to go to the washroom here quickly so I don't miss the GDP data. And I'm going to be back in about 3 minutes. If you guys were, okay, so for anybody who's wondering about entering on the 1-minute time frame, please go watch the scalping sessions. Either you enter on the breakout candle or this retest of these 1-minute high candles here. You either enter at 1803 live, enter at the candle close, or enter at the following candle. Or it's the same thing here. You enter on the bullish candle, retest candle, bullish breakout candle. Doesn't matter. But now we have news coming. So make sure you guys secure profits as we're coming towards the end of the month. You don't want GDP to like take you out like this. So no point. Catch your quick jabs at the market. Catch your piece of the pie and get the fuck out. Stops are positioned based on market structure. So your stop would have to be below 1801.5. Because if we were to break any lower below here, your trade would be invalid. Here you can see we had an upside move, a pullback, a double bottom, and then a break above 1803. So your trade would be invalid below 1801.5. Roughly a 15 pip stop loss for a 30 pip gain. For anybody who's asking about like more of these details, make sure you guys go to the Capital Hungry YouTube channel. Go to videos, and if you scroll all the way down, it's old. It's a bit of an older video. Watch the scalping series. It's a 4-part series. They're like 3-hour-long webinars. Scalping part 1, scalping part 2, scalping part 3. All right. Make sure you guys like, subscribe, follow the Capital Hungry News Twitter here. The Capital Hungry free Telegram analysis channel. Here you can see where I send news updates, analysis, trades I've taken, motivation, trading psychology. You can see the stuff I was showing you from 2019 to the current day. Capital Hungry Telegram channel. Capital Hungry Twitter news channels posted 25,000 tweets of news headlines. Capital Hungry YouTube page has hundreds of educational webinars. Hundreds of educational webinars on fundamentals, technicals, trading psychology, scalping, day trading, swinging, and so forth. If you want more, you can join the Capital Hungry private channel, which we do 5 daily New York scalping sessions a week, 5 market update and trade idea webinars a week. You have newsroom. There's too much stuff for me to talk about for the news channel. There's all this stuff is offered in the Capital Hungry News, Capital Hungry Room, private channel. I can't even talk right now because I gotta go to the washroom. All right. Let me go to the washroom. I gotta come back before this GDP data. GDP countdown is going to be starting soon. we'll just watch gold with the GDP impact here. So this is what we're going to be watching here, guys. GDP, initial jobless claims, and ECB. I gotta take a piss. All right, I'm back. One more minute here. Let's just wait for this. Yeah, just 30 seconds. So it looks like we're gonna get a liquidity grab first here. This trade ran really good. It ran like 60 pips. Okay, 8:30. We're spiking down first, grabbing liquidity. No upper wick yet. I think this is a liquidity grab area. ECB conference as well. Don't forget that too. There's the liquidity grab we're talking about so far. Came right down to the same zone. Heavy whipsaw so far. No upper wick yet. Looks like it's going to create that upper wick now. Two percent. Okay, so initial jobless claims is good, but GDP is bad. So it looks like we're gonna have a bit of whipsaw moves here. Don't touch anything here. Let's just wait for the dust to settle. All right. Jobless claims are still good. GDP is bad. So GDP did what we expected. Let's let the dust settle here. Let's let us come back above 1803 for more buys above 1803. Because we have some mixed data and we have the... So this is bad. Bad report, good report. So we have a little bit of mixed data at the same time. And we have the ECB monetary policy statement. So not a huge impact. We got another liquidity grab to like 1800. If we still hold above 1803 once the dust settles, then we should still potentially continue up as well. But we're just going to wait. It would have been perfect if initial jobless claims was also bad and the GDP was bad. Okay, so now Christine Lagarde is speaking. Christine Lagarde for the Euro Central Bank is speaking right now live as well. So she's going to have an impact on market sentiment and gold too. So let's just be patient here. Most of you secured your profits before the spike down, right? Just so you don't get caught in this shit. So Christine Lagarde is going to have an impact because she's talking about strong momentum, strong euro recovery, which is potential market optimism. GDP was very bad like we expected. We were right about that one. But initial jobless claims was good. And we have Christine Lagarde speaking right now. And she's talking about recovery and shit to come for Eurozone. So that's why yen is short-term weakening still. Yen still relatively weak at these highs. GJ still bounced off 156. Didn't break it yet. Actually did a little bit of a double bottom here. It looks like yen is still going to range and dollar is still going to stay in a range. So those quick jabs we got on gold before were perfect. This is what we're looking at right here. All of this stuff. So jobless claims, this was good. GDP was bad. And now we're looking at what Christine Lagarde is saying as well. If we don't see anything over the next like 5 minutes to execute on, like for example, if gold comes back above 1803, I'll see some more buy scalps again. But if we see dollar just range, yen just range, and nothing significant, then we're going to call it a day there with those gold scalps we caught. Because there's no point fighting the dollar range or the JPY range at this current moment. You know what I mean? Okay, let's see what Christine Lagarde's saying. ECB expects inflation to rise further, then decline next year. Christine Lagarde says inflation is also rising as recovery and demand outpace supply. Inflation rising primarily because of energy, but also because of demand. Shortages of materials, labor holding back production. Says favorable financing conditions are essential. It does look like she's a bit more optimistic in terms of Euro's economic recovery and rebound, but we're not seeing too much of an impact on the markets. We're just ranging now in the lower time frame. No point fighting this. This is looking messy now. If we can have these rejections at that same buy zone and then pop above 1803 again, we can take buy scalps back up to like 1805, 1806. Otherwise, it looks like from now, things are going to get messy with Christine Lagarde speaking in the mixed economic data. Does that make sense for everybody fundamentally and technically? We have mixed data reports from the US side as well as active central bank speaker. So it's going to keep things fairly messy in my opinion until like NYSE or maybe London close. All right, if we close back above 1803 though, maybe one more attempt, but don't overtrade. Remember, don't overtrade. No, I didn't take any gold trades. I stuck to just playing GJ in the range today. Christine Lagarde says higher energy prices may reduce purchasing power. GJ, I'm only buying. So GJ, we had another rejection at 156. No clean breaks below. We weren't looking for buys here because we were watching, because we were obviously watching the economic data and so forth. But if we come back above 0.2, if we do the same thing like I was showing you guys to the left here, take GJ buys above 0.200, meaning rejection and then break and retest above 0.200, or like this, break and retest above 0.200. So we have this rejection. If we come back above 156.200, you can take those buys. But anyways, everybody, it's coming to 8:40 a.m. Eastern. Through this stream, we broke down fundamentals. We broke down, so let's go through it again. We broke down economic events, what we were focusing on, how we were going to use it to our advantage in our predictions. We broke down key fundamental points and understanding market timing, fundamentals in play, and so forth. We also broke down dissecting how our safe haven currency and world reserve currency is moving, with the dollar in a heavy range and with JPY in a heavy range. So we understood as retail traders adapting to these market conditions that we were going to take quick jabs at the market and be in and out, grab our scalps 20, 30 pips and get the fuck out, right? As we're arranging end of the month and a lot of economic data. We gave a full analysis on gold, GJ, GU, Euro USD, and other pairs. And we also took some live gold trades that you guys got to take before the news from 1800 as well as 1803. If you guys enjoy these streams, please make sure to like and subscribe, and I'll see you guys next time. I have to go run a private session Zoom now with the private channel. All right? Those same trade ideas still stand. If you guys enjoy the value, enjoy the content, do me a favor, send a like on the video. It really helps with the YouTube algorithm and to get the video more exposure. And if you guys also don't mind, when the video is saved, make sure to re-watch it and take notes, because there's a lot of lessons given. A lot of lessons on fundamentals, technicals, entries, trade ideas, and so forth, psychology and so forth. All right? If you guys want these more often, if you guys want me to do these more often in a week, let's get to 400 likes before I end the stream right now. I'm going to end the stream in 30 seconds. If we can hit 400 likes in 30 seconds, I'll do this more often. But anyways, everybody, thank you so much. Thank you for your support. I will see you guys next time. Oh, now you guys get to 420 likes in a second, eh? But before, nobody wanted to like it. All right, maybe a Friday stream to close off the week then. So you guys don't like it, just it's you know it's free to like, right? Now you guys like it 100. Now I got 100 likes in 1 second. You guys are assholes, man. You guys are assholes. The whole time I was giving information, giving analysis, nobody liked it. But anyways, guys, I'll send it. Make sure you guys join the free Telegram analysis channel or the the Twitter, and I'll send you guys a message the next time I'm doing the live stream. All right. But Friday, we also have the Friday self-development live video too tomorrow. All right, everybody. All right. Thank you so much, everybody. Have a great day. Enjoy your Thursday. Don't overtrade. Don't over leverage. See you guys later.